So some interesting data to close the week last week with the US CPI coming in a little bit below expectations. We're seeing really few concerns around the world of higher inflation, and we're seeing the US retail sales that were very weak on a month-on-month basis. Of course, it's a one-off figure, but it's not good to see the US consumer coming in short of expectations, as consumption is a major driver of the US economy. I think this is an interesting sort of flag relative to the current theme of the market, and that current theme is that the dollar is underperforming because of the central bank policy convergence theme. That is the idea that, okay, yes, the Fed is slowly unwinding policy, but other banks are finally coming around and starting to play a bit of catch-up. We've got the Bank of Canada having been the first other major central bank to hike rates, the ECB slowly shifting away from its dovish bias, etc. But I think if from here, and this is a big if, but I think it's very important, if we start to see concerns about the U.S. economy picking up and the data starts to deteriorate from here, and I think there are a number of reasons to have that concern, especially further out in the year, this eventually provides stronger support for the dollar. I think the convergence theme is dollar negative, but a weak U.S. economy theme is actually dollar supportive, because when you have a weak U.S. economy, you expect other economies to follow, you expect liquidity concerns to pick up, and that tends to see the dollar being rewarded as a safe haven. So if that's the thing we're moving towards now, when I was thinking possibly we're moving towards it a bit further out, then I think the dollar posts a low for the cycle much quicker. So be on the lookout as we look at the various U.S. data points in coming weeks, which theme is gaining the upper hand here as we look forward.